Howdy, Jacob here. Today I will be going over what is a net company. Okay, so a net company is a term used for a company with a market capitalization that is less than the difference between the company's current assets and their total liabilities. And so this is essentially like the this is really the liquidation value if the company were to need to sell all their assets extremely quickly. They're basically saying that the property and equipment is going to be sold for pennies on the dollar. It doesn't really get incorporated. And then you're going to be selling all of your current assets at their current value. And then Ben Graham actually goes one step deeper. And when there's an even more attractive net, it's kind of calculating, since you're wanting, this is for companies you're trying to liquidate, even the current assets can be dampened. So cash and cash equivalents, short-term investments are all going to be one-to-one. You're going to be able to sell for the current value that they are because, I mean, it's literally cash and cash equivalents, so it's cash on hand. Short-term investments in the quarters that they have the results, they have the actual value. Um, so unless it's an extremely volatile investment, it's likely going to be pretty much one to one. It's a fair assumption. Accounts receivables will say that it's about 75%. So if I had 100 million in accounts receivables, we'll say that 75 mil will be able to go through uh, pretty conservatively. And then inventories, let's say you sell it for two quarters on the dollar, to where you're just trying to, again, you're trying to liquidate as fast as possible. You're selling for 50 cents on the dollar. So if you had 100 million inventories, we're saying that it becomes $50 million. And so those are the two ways of calculating a net. The actual definition of a net is just current assets minus total liabilities being greater than market capitalization. So here, the example I'm doing today is co-diagnostics. And so um, here I have the company in 2022. We can see these are their, um, this is just pulled from their balance sheet. $23 million in cash and cash equivalents, $58 million in short-term investments, $5 million in accounts receivable, $5 million in inventories, with only $9 million in total liabilities. So the net is saying, what's our current assets? What's our total liabilities? 82 million. Is that greater than the current market cap of 40 million? Yes, it is. And then the even more stringent net is taking 75% of accounts receivables, 50% of inventories, and still subtracting out total liabilities. Then you get to 78 million, which is still well above the 40 million market cap. So you could consider that a net. And here's why it doesn't always work. And so here I have actually the most recent quarter. I pulled from their most recent 10Q filed November 9th of 2023, and I pulled these figures. I pulled these figures straight from the 10Q. You can see them over here. So you can see that cash and short-term investments, as well as accounts receivables, actually burn through quite a bit, and total liabilities are still essentially the same. And so this is probably a year later, and we're seeing that they burned through quite a bit of cash and investments, to where their net went from 82 million down to under 60 million, which again is still greater than their market cap. So they still have a net position. And then even their more stringent net is 57.1, which again is greater than their market cap. But what you'd call this is, for companies that are selling this cheap, is likely for a reason. And so if we look at their income statement, we can see, or I guess their cash flow too, most recent 12 months, they've actually lost $22 million in cash from operations. So you could say that if they keep that up, they have a $22 million a year burn rate. And so basically what that means is, in a year from now, if they burn through that $22 million, then this will no longer be a net position. And so nets are great when a company actually has a likelihood of liquidating their assets. Maybe they're done with all of their business experiences and they're saying, hey, we just want to give cash back to their shareholders. Over here, you could see it was great. Like you were getting $2 for every dollar you invested, um, which would have been fantastic. But in the majority of cases, when you find a net, it is selling for so cheap for a reason. Usually, they're not producing cash flow, and there's a burn rate to where the um, they might have a net today, but then a year or two or three down the road, when they keep making investments, but they're not getting anything from them. So then it doesn't become a net anymore. So I'll say, in my experience, I usually like looking at, um, I usually like basing companies based on their cash flow. But I will say that if you can, it's very rare, and usually uh, the majority of cases that I've seen are for very small Chinese-based companies where, um, one, they're advisory shares, and two, you don't have like the SEC um, like digging into their numbers to make sure they're actually reliable. So there's really two reasons that you could be finding nets there. But on the American side, I have found a lot of shares that are American based that um, are biotech companies that are pretty similar to co-diagnostics, where co-diagnostics actually is in the healthcare equipment and supplies industry, where they make supplies. They're most known for making supplies for COVID, but they also do many more things. But this is not telling you buy it, don't buy it, whatever. This is just going over a net example. But the majority of times I see nets in American companies or biotech companies where they get a lot of money as like a grant, really, where maybe the Bill Gates Foundation um, is saying like, "Hey, we'll give you $300 million to try to fix tuberculosis or whatever." I know very little about biotech, but um, they give them a huge grant, so their balance sheet looks fantastic. It says like 300 million cash and cash equivalents with 5 million in debt, and the company is selling for $50 million. It looks fantastic, but then you'll see that maybe they're burning through, 100 mil a year, and so yeah, it's a net now. But if it doesn't pan out the way that they want it to, they're just going to burn through all their cash in 3 years, and then if the company didn't find anything through their research or whatever the company's experience might be, then the company would just go under. And so the rare case is if you can find a company who's selling for a net or very close to it, um, and producing positive earnings and free cash flow, and you think that they will consistently produce positive earnings and free cash flow, that is going to be the safest company for you to invest in, because one, they're producing positive cash flow, so their balance sheet will likely improve beyond what it is right now. And then two, you have the safety of the balance sheet to where you're extremely confident the company will not be going under, because even if the company were to quote unquote go under by liquidating all their assets, it would be liquidated and you would be left with more than what you bought the company for. And so I hope everyone understands a little bit more about net companies. It's another way of valuing companies, and you'll be looking at likely a lot smaller companies and a lot more different companies than what you're used to. But this is just a quick overview of what it is and the type of companies you'll see it, and then also some of the things to keep in mind. Um, to hesitate to be like, oh, it's a net. I'm buying all the nets I know. It's like, don't do that, because you have to understand that what their burn rate is and understand, will the company actually liquidate their assets or not? Because some CEOs, CFOs will be like, we're not liquidating the assets. We'd rather burn through everything. If we don't find anything, we don't find anything. So please just keep that in mind if you're going to invest in these type of businesses. But yeah, I hope everyone learned something today and has a great rest of the day. Thank you.